Hi, I'm Tim Lowe from the ATO. I'm the Assistant Commissioner and also the Tax Time spokesperson.
Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
Kate, welcome to this episode of the Australian Finance Podcast.
It is wonderful to be back, Owen, and we have a very special guest with us today in the studio.
No pressure. Tim Lowe, how you going?
Good, Owen. Good to see you, and good to see you, Kate.
Thank you for coming all the way up to level 4 and joining us in the studio. It's a pleasure.
No, it's great to be back on again. And obviously last year, there was COVID and we had to do things from home. So it's good to be meeting in person for once.
Yeah, they say there's only 3 things that are certain: death, taxes, and Tim Lowe coming on the podcast. So here we are. We are going to talk about all different things today, about individuals and tax returns and deductions. But maybe just to kick things off, we might ask, what does an average day look like? If I'm not mistaken, your title is Assistant Commissioner. What does that look like? What do you do?
Yeah, it's a couple of things. Obviously, I've got a day job, which is risk and strategy role for individuals. So I basically review each of your returns. So I'll be watching really closely this year, Owen and Kate. Uh-oh. But on top of that, I'm also the Tax Time spokesperson as well. So you might have seen me around on TV or online, on LinkedIn or somewhere like that. So my role is there to kind of communicate to the Australian public about tax time in particular and helping them get the right deductions and claim the right things and get their tax returns right the first time.
We probably should mention, Tim, that you're from the Australian Taxation Office, the ATO. And if listeners are unfamiliar or they've only recently arrived in the country, what does the ATO do?
The ATO collects taxes on behalf of the government. And we use those taxes to pay for public services. So whether that's schools and hospitals or whether it's other public services, that's our role, to administer the tax system for all of us. So I think sometimes people get into their mind that, it's an us against them, but really, the ATO is here to work for the community and that's our role on a day-to-day basis.
How did you end up in tax, Tim?
Yeah, how did I end up in tax? Or, it's probably like everybody else, right? When you come out of uni, you're just looking for a job as a graduate. And I ended up working at Deloitte. I got a graduate role. And normally with those graduate roles, you have to do like a vacationship or something similar. So one of my friends at uni actually got one of those, but I didn't get one. And he ended up going for a different job, or because I think he wanted to be a lawyer. So he vacated that position and they interviewed a few other people and I was one of those lucky ones and somehow got a gig at Deloitte in tax, and so that was nearly 20 years ago. So I've been stuck in tax for 20 years and I've just kind of bounced around doing different things in different forums. Like I'm a lawyer by trade, so that's where I started after I was at Deloitte, and then worked at BHP for a few years and then found myself here at the ATO. And I was doing a legal role, and then a few years ago I got a tap on the shoulder saying, are you interested in being the spokesperson for the ATO? And I was a little bit worried about that because I was always afraid of public speaking, to be honest. So I really wanted to kind of test kind of an Achilles heel for me personally. So it was a great opportunity to do it, and I've obviously put a lot of hard work into it, but I've also got a lot of support from the ATO, and whether it's the senior leaders or my colleagues, they've just been a fantastic support since I've taken on the role.
Now that everyone knows you work for the ATO, how does that work at dinner parties? Is everyone a bit scared of you?
I don't get invited to dinner parties, right? So look, it's always a little bit difficult to work out what to say because, like my son just started school this year, right? So you're meeting a whole set of new people and then people will ask, what do you do? And you just don't know what to say still.
Yeah, it's like once people know you work in finance, they're always asking for personal advice, which you can't give. So
some freebies, right? We're looking for a freebie, right? Yeah. So, but yeah, no, it's been like I think part of the reason for doing this role, and I joke about this, but I do mean this seriously, is I want our people at the ATO to feel comfortable when they go to a barbecue and say, I work at the ATO. Like I want people to understand that public servants do a fantastic job, and it's a credible privilege to be working at the ATO and trying to help people get it right, so we can pay for these kind of public services like schools and hospitals.
And there's millions of people in the country that are impacted, right? So, yeah, it is a privilege, and to be able to speak on behalf of the ATO is, I imagine, very humbling as well. Every year, Tim, we hear through the media or something like this that there are changes or even just things that maybe the ATO is focusing on. And one of the things we wanted to talk about is some of the key changes for individuals claiming those work-related deductions this year.
Yeah, Owen, there's a few changes that are coming up this year. The first is the working from home expenses. So we know millions of Australians have been working from home, and so that's an expense that we expect people to claim. And we'll talk more in the podcast about it, but from 1 July of last year, so for this financial year, the working from home revised fixed rate method has increased from 52 cents per hour to 67 cents per hour. So that's a 28% increase. And the types of costs that are included in that expense are a little bit different to prior years. And the other thing to kind of note is that previously you needed a dedicated workspace to use that. So you kind of needed a home office or something like that to do that. But this year we're saying it doesn't matter, because as a result of coming out of the pandemic, we realised everyone was working, on the kitchen bench or the couch or in the bedroom. So we wanted more people to be able to access this particular method. The second one is in relation to car expenses. So we know millions of Australians going back into the office, and they're travelling a lot more between seeing their clients and so forth. So the rate, or the cents per kilometre rate that's being we're allowing people to use is now 78 cents per kilometre rather than 72 cents per kilometre, up to a claimable amount of 5,000 kilometres for any work-related kilometres that are used. So that's the second kind of key area. And then the third area is self-education expenses. So we are seeing more people, if they have been doing extra studies that are related to their work, they can claim that. Previously, there was a requirement that $250 couldn't be claimed straight away. So now that requirement's gone. So you can now claim your self-education expenses provided it's related to your work.
It sounds like some of these changes are really reflecting the way that we're changing working and living, because, as you said, most of us don't have a dedicated office space. We are working in the corner of the living room. That's right, Kate. And like for me, like when I've been doing some of these podcasts or even these interviews, I'm doing it on the ironing board. So oh, really?
It's a great stand-up desk.
Behind the scenes.
Yeah, great stand-up desk if you're looking for a cheap option. So and allows you to kind of you can work from anywhere really with the ironing board, and you can use it as a stand-up desk as well. So
that's great.
Are there any other changes this tax time that are going to impact us as individuals we should know about?
Yeah, look, one big thing people should understand is we do expect some refunds for people to be a bit lower this year, or some people might even have a tax bill this year. So there are like a number of reasons for this, but the main one is the low and middle income tax offset, which ended last year. So that was equivalent to about $675 to $1,500 for incomes up to $126,000. So that's no longer in place, and so we do expect people's refunds to come down in that regard. One thing we always say to people is if you are overwhelmed and getting behind with your tax, that it's important that you contact us at the ATO. We're here to help, or speak to a registered tax agent if you have one. It's important you don't bury your head in the sand, because that's the worst thing you can do. The best thing to do is communicate with us or speak to a registered tax agent.
Yeah, speaking from experience, I must say that that's always been a great experience. Like it's a positive experience to just stick your head out of the sand and to speak to your agent or the ATO directly.
No, that's right, Owen.
Yeah. So we're obviously, here on the podcast talking tax, and one of the things that everyone wants to know, like, what are some of the common deductions that individuals are claiming? Yeah. Because not necessarily here for tips, but just looking for, like, what do you see from the ATO's perspective?
Yeah, look, when it comes to deductions, we want people to claim what they're entitled to, nothing more, nothing less. I've said this like heaps of times, right? But that's really what we're about. We're not here to say no deductions, right? But it really depends on the job that you have. So we've got nearly 40 occupation guides on the ATO's website that can really help you work out what you can and can't claim this tax time. But in terms of what we're seeing, when it comes to car expenses, I mentioned before, we saw nearly 3 million people claim car expenses last year, and there's effectively two methods that you can use, and I'm sure your listeners will know about this, but I'll mention them again. You've got the cents per kilometre method that I mentioned before, and you've also got the logbook method to calculate your deduction as well. Now, if you're using the cents per kilometre method to calculate deduction, this rate's increased from 72 cents per kilometre to 78 cents per kilometre for this financial year. So it's just really important to remember that when you use this particular method, you own your car for work purposes, and it does include those regular trips between home and the office. So if you're going off to the shops for get some snacks for working from home, that's not going to count as a work-related trip. So. And the other thing to note with that method is that it's an all-inclusive method. So it covers things like your decline in value, your insurance, rego, maintenance, repairs, and anything associated with your car. So you can't claim any of these costs on top of that particular method. Now, if you're using the logbook method, you need to make sure you've got a valid logbook to determine the work-related percentage use of the car, and you've got evidence of that. So the big thing we always say is you've got to make sure that you've got the records to support whatever method you're using, right? So that's always our kind of our foundation, whether it's car expenses or working from home expenses. If you've got the records, you've got the choice to use the particular method that works for your circumstances. And the other thing we always kind of see people get wrong a little bit when it comes to car expenses is, typically speaking, you can't claim the trips from their home to the office as a car expense or tax deduction. So, and that is regardless of how far you work, how far you live from your office. So that's just something for people to kind of remember.
Sorry, Owen.
Yes, I do live a long way from the office. So.
He had a COVID tree change.
Yeah,
a tree change. Yep.
Yeah. I'm not regretting it, but it is a long way to drive in, particularly when you're in the city till midnight last night and then here at 6:30.
Yeah, so. You might as well sleep over. Probably.
That's it. Yeah, that was one of the options. How about in terms of, are there any types of things that come up where, I don't know, what would you call them?
Funny claims when people try to claim things that they're not supposed to claim that have grabbed your attention in the last year.
Yeah, look, there's obviously people working from. There was plenty of kind of expenses that were coming through to the keeper. Look, people, when they were doing Zoom calls, Melbourne's really cold, so a lot of people were trying to claim their UGG boots as a tax deduction, which, that's considered to be conventional clothing, so you can't claim that as a tax deduction. And then we've seen people trying and claim things like their Apple Watches, saying they need it for work, but really, they're just an office worker, so they don't really need an Apple Watch for those particular purposes. So those are a couple of things. And then the thing that always comes up is people trying to claim their food. So they'll try and claim the tea, coffee, Tim Tams, because their employer at work provides it for them, so they think they can spend it. They can claim that when they're working from home. But those things are considered to be private expenses. So we knock those ones out pretty quickly. But every year you see people trying to claim different things, and obviously my guys are looking very closely at that, and they get a bit of a chuckle sometimes, but they get knocked out.
Got to get
quickly.
your laughs somewhere.
You have to. We're tax people, so we don't get a lot of opportunities to laugh about things. So this is good. Yeah, so we do see that, but we do knock them out pretty quickly.
Yeah, I know one of your team members shared an example where there was an accountant looking to switch careers and become an opera singer, and they were claiming deductions for opera gowns and a trip to Italy, which made me laugh a little bit. Yeah,
it made us laugh when we saw it as well, Kate.
So how about things like clothing and laundry related expenses, Tim? This is something that a lot of businesses, obviously you see people like myself with a branded jumper on, or you see tradies with whatever, wearing the company's logo and whatever. What can you tell us about this?
Yeah, and look, when it comes to clothing laundry claims, obviously they're common expenses that people try and claim, but one thing that people tend to forget is that you can't really claim a deduction for buying or repairing or cleaning conventional clothing. So, even if your employer says, the clothing's compulsory and you can only wear it at work. So things like, black pants worn by waiters, business attire worn at the office. So, suits, jeans and jewel shorts worn by trades, like those kind of things can't be claimed, but you can claim things like, safety equipment. So if you're a tradie and you've got steel cap boots that you need to wear on a work site, those things can be claimed. So it really depends, again, on the job that you have and whether something's like, as I said before, if it's that conventional clothing, you're just not going to be able to claim a tax deduction for that.
So that nice jacket you've got, you're not claiming that in your tax return, Tim?
No, even though, look, some people, again, one of these other funny claims, that someone was trying to claim the fact that, they had to be dressed nicely, they had to, because they were seeing clients, so they had to claim a suit, they had to claim their grooming expenses, makeup, and I was thinking to myself, you just can't do that. Yeah. Even I can't do that, and I'm going on TV and radio. So, not that you probably don't need it for radio, but yeah, it really has to be related to your deriving your income as a professional.
Yeah. So the big one, Tim, which you've already mentioned a little bit, is working from home. We see some organisations bring employees back to the cities, back to their offices. We're lucky enough to work from home a few days a week, as are many people around Australia. So you mentioned there were some changes there. What should people be aware of this year?
Look, in terms of the stats, we had 5 million Aussies claiming working from home expenses. We know lots of Aussies have been working from home, but we know millions of Australians have headed back into the office. The trains and trams in Melbourne are packed
unfortunately.
Tuesdays and Thursdays. Everyone knows it's packed. So we know people going. We've checked the figures, the traffic figures, in the city of Melbourne and other cities as well, just to make sure to kind of map out, what we're seeing in terms of that data. And we know millions of Australians have headed back into the office. So we know working from home claims can't be the same as it was last year. So we're telling people, you can't copy and paste last year's claims. So that's something that people should be aware of. But when it comes to claiming working from home expenses, this tax time, we spoke briefly before about the revised fixed rate method. And then we've always had the actual cost method that has always been available. And as I mentioned before, I'm going to sound like a broken record, the records are key, right? The records are key because it gives you the choice. So you can either use the revised fixed rate method or the actual cost method if you've got really comprehensive records. And then you can either work out on one of our calculators on the ATO's website to work out what gives you the best result, or you can even speak to your registered tax agent and say, hey, what's going to give me the best result this tax time? I've got all the records.
May as well take the best result.
That's and we want you to do that. If you've got the records, we want you to take the best result. Now, when it comes to the revised fixed rate method, the types of costs that are included in that 67 cents per hour that I mentioned before are things like energy costs, so electricity, cooling, heating costs, things like stationary computer consumables, and those are really hard to apportion costs like internet and phone costs. So those costs all include that 67 cents per hour method, and so that's effectively what you can claim under that method. And so now there's kind of no excuse if you want to call your mum and dad. That's not going to affect your working from home deduction anymore because it's all bundled up in that 67 cents per hour. And as long as you've been working from home, you just multiply the 67 cents per hour by the number of hours you've been working from home. When it comes to other types of those big ticket item expenses like laptops and computers and second monitors and the like, yes, you can claim a deduction as a decline in value or depreciation deduction over a number of years if the item's more than $300. So that's on top of your 67 cents per hour fixed rate deduction. And then the other method, as I mentioned before, is the actual cost method. That hasn't changed, and that's a more complicated method. You need really good records to use that particular method.
And what type of records, apart from your employer vouching that you worked from home 3 days a week, like what kind of records? You've mentioned records, so.
Yeah, no, look, so for this year, we've got a transitional period if you're using the revised fixed rate method. So from 1 July last year to the 20th of February this year, you just need a representative period to show how many hours you've kind of worked at home. So that could be a diary or timesheet entries kind of over, say 4-week period. From the 1st of March of this year to the 30th of June this year, you just need to make sure that you've got a diary or timesheet entries that are contemporaneous to document how many hours you've been working from home. So it's a bit more, I wouldn't say it's more rigorous, it's just like a weekly timesheet, and you can just get it from your employer.
Could that be your Google Calendar?
Yeah, it could just be like something like that. As long as you can evidence if someone was to audit, if we were to audit you, then you just need to make sure you've got those records. And like I said before, if you've got really good records, there's nothing to worry about. So the other thing to kind of keep in mind is with the revised fixed rate method is that you need to keep it like an invoice or bill for one of the expenses that you might have incurred. So if you've incurred internet costs, just need to have their internet bill.
Yeah, most of us would have that in our
Everyone's
email
got that.
inbox somewhere.
Yeah, everyone's got it. I think the key is, I think you might have mentioned this last year, Kate, that your idea of having an email folder
Yes.
with all your tax receipt, that's a great idea, right? Another idea is obviously using the ATO app. That's another way you can kind of funnel all your expenses into the one location. So then when it comes tax time, it's a bit easier to kind of make sure you're capturing all the deductions you're actually entitled to. So if you've got a good spot for that, that's always really helpful. And again, when it comes to the depreciating assets that you want to claim, again, you need those records. So the receipts of when you bought it, how much it was cost. Typically, you'll have these, right? Because if you want the warranty for the product, you're going to have the receipt. So you're going to have these records in your toolkit. The other thing to kind of note is, which we haven't talked about, is around the work-related component and the private component. So especially with your depreciating assets. So if you're using the laptop solely for work, you can claim a decline in value deduction for the entire amount over a period of years. So a laptop's normally 2 years. But if you're using it for games and stuff like that, then that's a different story. You've got a portion for how much you use it for the gaming and how much you use it for work.
I feel like that's tricky, Tim, because I watched a Netflix show on this laptop the other day, and so suddenly my work laptop became personal for an hour.
Yes.
But it was a finance show, Kate.
It was a finance show for the finance podcast, so I'll give you that one.
So that might be
Remake
okay.
Katie.
So I think Owen's just saved you. So if we audit you, Kate, we'll get Owen in to vouch for you.
All right, we'll have records of that.
Yeah,
We've got
we
my
did an
Netflix
episode on
watch
this.
history.
We did an episode on this. So.
No, but records are important, and we have spoken, as you mentioned, Tim, on the show in the past, whether it's having a Google Drive folder, a Dropbox folder, a folder in your inbox. So I personally have a folder that's just called tax, and anytime there's a charitable donation I make, there's something that's relevant to tax time, like I've received income from my shares, I just drag all of those emails into the tax folder, and then future me sorts it out at tax time. And I try to keep a Google sheet with just like a list of all of the things as they come, because it does take a while sometimes to sort through that folder.
No, that's very organised, Kate. I should be doing something similar myself. But that's a really great idea, and it's really important because who knows what happened last week, let alone what happened the 1st of July last year. So, having those records in the one space is really important. We always talk at the ATO about the My Deductions tool within the ATO app. We think that's a fantastic way where you can just take a photo of your receipt and you pop it into the app, and then come tax time, it uploads into MyTax if you're doing it yourself, or you can actually send it via email to your actual registered tax agent. So it's all there in one spot. Makes it easier for them, or makes it easier for you if you're lodging your tax return yourself. And the other thing about the ATO app is you can also check your super balance. So we know super is really important for people for their future, and that's a really good place to actually see what the balance looks like instead of it being tucked away in another email from your super fund. So. Look, there's a couple of good reasons for using the ATO, but likewise, your routine, Kate, is a really good one as well.
How long do you have to? Oh, sorry, I was just going to say, how long do you have to keep the records for?
Yeah. Typically speaking, when it comes to record keeping, it's 5 years from the date of you lodge. But there's also these little differences where, for example, if you're claiming kind of prior year losses, you need to keep the losses 5 years after you utilise those losses. But typically speaking, we always advise, 5 years plus making sure you've got digital records as well, because sometimes with the receipts, they fade over time. So it's better to have the digital record in your toolkit.
I was just going to ask, do sole traders and small businesses use the app as well?
Yeah, well, if you're a sole trader, you can. So you absolutely can use that app. With small business, obviously they've got their own kind of natural accounting system that they can turn to kind of record their information. It really depends on Owen, to your point, the type of, business you're trying to run. So, if you're a sole trader, you can use this tool. But, if you're a small business, you typically use, one of your own natural accounting systems.
Yep.
Yeah, I'll definitely promote the logging into your MyGov account and jumping into the ATO website because, as you mentioned, you can see your super balance. You can also see if your employer's been paying it.
Yep.
You can check your HEX.
Yep.
If you've got a student loan, see what's happening there. You can check if your employer's been paying you and all of that sort of stuff. And your employer...
Medicare.
Yeah, there's a lot of things there, and it might take a while to set up the account, especially if you lose the password like I did the other year. Yeah. But it has a lot of information there in one spot.
That's right.
How about for investment, Tim? We talk a lot on this show about investing, whether it's shares or ETFs, maybe people investing in property, whatever. If you could speak to that generally, what you see from your side of the fence and what records people should be keeping?
Yep. So from our side of the fence, it's all about the records. I've said it a few times now. But that's kind of the key thing. So, when you've got investment like ETFs and shares and the like, we want people to have their buy and sell contracts. When it comes to property, it's, the sale agreement. You need those kind of that information. The other things we like people to have is the bank statements, the dividend or distribution statements for the shares or from the ETFs. And any kind of exchange records if you've been investing in crypto. So one thing we always say to people is, download it every 3 months just to make sure you've got a good record of what you've invested in crypto. And the other thing I always say to people is make sure you've got receipts or invoices for the expenses that relate to those investments as well. So you want to make sure you're not just including the income side piece. Make sure you've also got the deduction piece as well, so you can kind of get your tax return right, which is including the income and also making sure that you're claiming the deductions are relevant to that investment as well. The other types of records we also like to see from people when it comes to lodging your tax return is the dates you bought the investment. That's really crucial, and particularly if you're buying crypto, making sure you've got the Australian dollar conversion of the crypto that you've purchased. And as I mentioned before, the expenses are really crucial. So particularly with property, it's something that we're obviously focused on this year. We are seeing a few mistakes being made when it comes to interest deduction. So we are seeing people refinance their property to, buy a Tesla or go on a trip to Bali, and they claim the entire interest amount as a rental interest deduction, which you can't do. You've got a portion for the amount that you use for the rental property versus how much you use for the private expense.
We had one question that came through from our audience because I did open this up to the crowd a while back, but one of the questions was earning income as an employee and also being an ABN holder at the same time. Like, how does that work?
Yeah, look, simply put, we know lots of people, in fact, 1 million people have second jobs or a side hustle. So we know people are salary and wage earners, but also are running a side hustle on the side, and they've got an ABN, and they're doing really well. And that's great news. I think from our perspective, it's about, again, making sure you get your tax return right. So that's including all your income. So if you've got a side hustle, you're making money regularly, that's declarable. You need to have an ABN. You probably need to register for GST, especially if you're earning more than $75,000 in turnover. And you need to also make sure you've got the deductions as well. So it's almost the opposite side of the equation. It's making sure that you've got the records to demonstrate that you've got these deductions that relate to your side hustle or business, and then if they're work related, they can be claimed as a tax deduction. When it comes to completing the tax return itself, you've got to make sure that you complete the main aspect of the tax return, but also complete the business and professional items schedule as well. And in that space, that's where you can claim all the relevant expenses associated with your business in that particular schedule.
I know that's one area that it can be really helpful to use an accountant for, because when I've done that in the past, there was a lot of different things to fill in. Yeah,
it's not nearly as straightforward, at least from people that are not from a finance background. How about if someone's a contractor?
Yeah, look, as a contractor, you mentioned before, and you can be a sole trader, or you could, incorporate a company, partnership or trust. So it really depends on your operating structure in terms of how you complete your tax and super obligations. And obviously, if you're a contractor, you're going to have different tax and super obligations compared to a salary and wage earner in that respect. Our advice for contractors is to make sure you've got, you've put some money aside to cover your tax obligations, at the end of the year. Pay-as-you-go installments is something that can help you kind of make sure you're managing that in a really proactive manner. And for your listeners out there, pay-as-you-go installments are those regular prepayments of the tax on your business and investment income. So when you do that, it just smooths out your cash flow when it comes to your tax obligations come tax time. So with the pay-as-you-go installment regime, you can enter that voluntarily, or when you kind of get past certain thresholds, we also put you into that system as well. But going back to as a contractor, you just got to make sure that you complete and lodge your activity statements that you get from us. Report and pay GST on an activity statement if you are registered. Keep your records, as I said before, and the other thing that we also remind contractors to do is just make sure you understand whether you're receiving personal services income as well.
Yeah, Barefoot Investor, Scott Pape wrote about this recently, about how he thinks about it and puts money aside for his tax bills and all that sort of stuff. And I definitely see it working with a lot of small businesses. An inability to predict, so those like quarterly or however often payments people make definitely smooth the ride.
Correct.
And what about for people listening that maybe it's been their first year as an investor and they've never had to do a tax return as an investor before? What things should they be thinking more proactively about when it comes to tax time?
Yeah, so that's a good question, Kate. So there's probably two things. There's probably what I'd call the income side of things. So whether, if you're investing in shares or, property, you've got the dividends, rent and, interest. And then you've got the kind of what I call the asset side or the investment side, where you've got the disposal of that. So with the income side of things, it's just making sure that you include that on the specific labels on the tax return. Now, with things like interest and dividends, we can pre-fill that, so that you just have to not lodge your tax return on the 1st of July. Wait a bit of time. We always say kind of end of July, and typically that information's pre-filled, and all you need to do is check to make sure it's correct. But for things like crypto, for example, and you get where you can get income like staking rewards or airdrops, you got to make sure you include that specifically in other income. As I mentioned before, with the disposal of assets, there's typically capital gains tax consequences when you dispose of an asset, and it's considered to be part of income tax. But one thing to kind of remember is that if you've held the asset for at least 12 months, you can get a capital gains discount, and that's typically 50% if you hold it that as an individual. So that's something your listeners should be aware of. And if you are lodging using our free MyTax platform, that we've got these videos that you can look at, and they can kind of walk you through how to declare your investments. So that's at ato.gov.au/CGT videos.
There'll be a heap of resources and links to the ATO website in the show notes for anyone who's interested. And I think that's really important. You obviously should be speaking to a tax accountant, or consulting your tax advisor appropriately, or just reviewing the ATO website. That's really important. It's a great resource too, with plenty of case studies and examples. I think that CGT discount is actually something maybe we can just quickly double click on. Can you just explain what that means? Because a lot of our community do invest, and if they're 1 to 3 years in, they might still not truly grasp this.
Yeah, so when it comes to capital gains tax, so if you've held that asset for 12 months, as I said before, you can get a capital gains tax discount. Now, with that discount, you just basically, let's say the gain was $1,000. Instead of including $1,000 in your tax return, you just include the $500 in the tax return. So that's basically that 50% discount in operation. Now, the other thing that can happen when you invest, obviously, is sometimes you don't make money. You sometimes lose money. That's happened to me.
The best of us.
I'm part of that crew as well. You can have capital losses, and so those capital losses can be offset against other capital gains made in that year, or they can also be carried forward. So and it's not kind of limited to a particular asset class. So you can use that. Say you made a capital loss on some property and you wanted to offset that against some capital gains you made on shares. You can do that in the same year. And if you don't use all of that capital loss, you can carry it forward into a later year. So that's something for listeners to kind of keep in mind.
Absolutely, it's so important. Some of these are big. I would put that as like the big rocks in the tax jar for people to understand.
Yep.
And it's a pretty easy one to get your head around.
Yeah, and we had another question come in because often if people are in a relationship, they've got some joint brokerage accounts. And one of the questions was, how does tax work if I've got a joint brokerage account with my spouse to buy and sell investments?
Yeah, if you own investments jointly, your ownership interest is likely to be 50-50 unless you've got some sort of other agreement in place with the other person or spouse for some other distribution amount. So we do often see people try and pull the wool over our eyes, so to speak, and get tax benefits when they're probably not supposed to. So that's like when couples add investment income for the lower paid spouse's tax return. That's something that's just a no-no, because it goes against the legal interest that you've agreed upon as spouses. So that's something we do pick up quite a bit, and we obviously remind people not to do that.
Yeah, makes sense. You mentioned before that for that pre-fill with things like interest and that type of thing, it's best to wait a little while. Whereas I imagine some people are like, it's July 1, I want to get some money back in my refund if I get one. When should people think about lodging? And I don't know if there's a best time, but just how do you think about it generally?
Yeah, look, generally speaking, we say, wait to the end of July. And that's when a lot of that third-party information is already automatically included in your tax return. So that's that information from government agencies like Service Australia, if you're receiving income from there, your employers, bank interests, a lot of that information's automatically pre-filled into your tax return. So that means it just makes it easy for you to do your tax return. So for me, I'm pretty lazy, so I like that information there. I just make sure that's all included. So we I know the cost of living pressures are high, so people are kind of eager to kind of lodge their tax return. But what we do see a lot of people do is make a lot of mistakes kind of in those first couple of weeks of July, and we're doing a lot of checks. Yeah, because we're seeing a lot of people make mistakes there. So it actually slows your tax return down, because when we do see a mistake, we actually slow. We do extra checks on people's tax returns. So what we are seeing is that less people make mistakes when the pre-fill's completed into your tax return. So that's why we always say, if you wait to the end of July, most of your information, if you've got simple fares, is already included in your tax return, and that makes your job easier. And the other kind of benefit that people sometimes forget is that it gives you time, if you're not as organised as Kate, to find those receipts from the 1st of July last year. To make sure you're claiming the right deductions, because we want people to get it right the first time. Because again, when it comes to amendments, for example, amendments slow things down. So we want people to get it right the first time. So take your time. It's not the 100-meter sprint at the Olympics. Take your time to get all your deductions right, and also make sure all your income's included.
Yeah, because chances are there might be a bank account you earned some interest on, because finally we earned some interest on our bank accounts this year. You might forget about. And so if it pops up in the pre-fill, that might jog your memory and go, oh, I had $50 of interest from the bank account. Oh, exactly. Yeah, that happened.
So what happens if people do get it wrong?
Yeah, if people get it wrong, it depends on how bad they get it wrong. So if they're deliberately doing the wrong thing, we're going to come down really hard, because that's what all Australians would want us to do. If people are kind of deliberately gaming the system or taking the mickey out of the system, if you are making the an odd genuine mistake, we want people to get it right. I think I mentioned maybe before the show, we talked about prevention before correction. We're really about wanting people to get it right the first time, because it's in our interest and everybody's interest to make sure people are doing the right thing the first time. So, our view is, if you've genuinely made a mistake, we're here to help you. If you know what that mistake is, you actually can do it yourself. So you can go on to ATO online services through your MyGov account if you're linked into the ATO, and you can request an amendment yourself and make the change in the tax return yourself. It's really important to remember that if you have lodged a return and you've realised that you have made a mistake, just to wait for the assessment to come through on your original tax return before you make an amendment to the tax return, just because it slows things down again. It just creates confusion, and It's better just wait a little bit longer just to make sure you, and then put in the amendment if you've found a mistake.
Okay, that's good to know. So if I did discover I had a bank account I'd earned $50 of interest on that I'd forgot to include in my original tax return, I can wait for my assessment to come through and then just log into my MyGov account, lodge an amendment with that additional bank interest, and there we go.
Perfect. Well said.
Well said. There we go.
Okay. Hopefully that doesn't happen though, Kate.
No. I keep a spreadsheet.
Yeah, you've got very good.
It won't happen to her. I don't know about you.
Yeah, it probably happened to me, to be honest. Yeah.
Owen's a bit more chaotic than me. And Tim, I know the ATO has a lot of helpful resources, and we've shared some in the past. There's some great guides for new investors, and as you said, there's job guides. So if you're a nurse or a teacher, you know what are some of the things you can claim or consider if you work in that profession. But are you able to talk about sort of the most helpful resources that listeners should be aware about if they need assistance getting their tax return done this year?
Yeah, good question. There's a couple of things you can do. The first thing to do is you can start on our new to tax and super information on our website, and you'll find information about why people pay tax and why it's important. Accessing ATO online services through MyGov. Whether you've been starting your first job or your first side hustle, lodging your first tax return. We talk about super as well. So that's a really good place to start in terms of that information. We also, as I mentioned before, we've got online calculators and tools to help figure out your working from home expenses, your capital gains tax consequences. So that's another part of the website which you can check out. And that's found at ato.gov.au/new to tax. The other thing you can do is if you have really simple affairs, we've got this service which is free and confidential called Tax Help, and that helps people earning $60,000 or less with simple affairs to lodge their tax return on their behalf and help them on their behalf. So if you want to find out more information about that, it's on ato.gov.au/tax help. But what we always say to people these days is it's actually quite easy to lodge your tax return through our free platform, MyTax. If you've got more complicated affairs, you've got lots of investments, ETFs, rental property, or side hustle, I'd probably go to a registered tax agent myself. But if you've got really simple affairs, just a salary and wage earner, got a bit of interest from your bank account, dividends from shares, I'll just do it myself because, it is really easy and simple these days to do it. And our website's got heaps of information that makes it really easy and simple for people to do it themselves. So from my perspective, it's not as hard as people think. That's probably what I'll leave your listeners with.
Yeah. It does seem a bit scary and overwhelming doing taxes for the first time. I remember when I was 18 doing my first tax return, it was all a bit overwhelming. But now I've done it a few times and I use the help of an accountant. It's a little bit easier.
Absolutely. Yeah, you got expert help?
Not completely easier, but easier.
Tim, thank you for joining us in the studio. It's a real pleasure to see you sitting before us and taking some time to share your wisdom. I'm sure people can find you on LinkedIn as well and see plenty of the other media appearances that you've done, but we do appreciate you taking some time to join Kate and I in the studio.
Thanks, Owen. Thanks, Kate. It's really beneficial for us to be able to be on your podcast, and we would just really appreciate the opportunity. So thanks for having me on.
Thank you. And Kate, as always, thanks for joining me.
Thanks for listening, everyone.